Welcome to Beyond the Press Release, a production of AGORACOM, in which we take the time to speak with small cap executives after they put out important news. With us today for the first time ever, and that's because it's a new listing, Brent Suen, President, Executive Chairman of Logiq Inc., trades on the NEO under the stock symbol LGIQ, and on the OTCQX, that's the highest tier on the OTC, also under LGIQ. Here's what you need to know about the company. This is what I love. The company is essentially the AGORACOM of the e-commerce world. And what I mean by that is, you know that AGORACOM helps small and mid-cap companies to win the attention of investors. Well, that's what Logiq does. They help small and medium businesses compete against mega brands in e-commerce, right? The global e-commerce market has surpassed about $9 trillion, scheduled to grow by 14% compound annual growth rate to 2027. But mega brands control almost 70% of that in the US market alone. And they're using that strength to win even more market. That makes it harder for small and medium e-commerce business to compete in what should be a massive market for them. That's where Logiq comes in. They're an award-winning e-commerce and fintech solutions company that's addressing that problem by helping drive e-commerce for small and medium businesses around the world. And more than just lip service, revenue of $37.9 million in 2020 from two of its divisions. So they're hitting it out of the park, more than just lip service. And the press release here to talk about August 16th, Logiq reports Q2 results, revenue up 3% sequentially, not year over year, sequentially to $8.3 million with gross margin at a record of 29.5%. Brent, welcome to the show. Welcome to AGORACOM.
Thanks. Glad to be here.
Before we get into some of the details about the company, the financials, these are great financial results. How does it feel to deliver such a strong first quarter after listing at the end of June?
Fantastic. And I say that because if you look at our historical financials, we showed very good revenue growth over our 5-year history. What we did last year is we restructured the business to where our gross margins would improve and look a lot more like some of the e-commerce enabler and ad tech giants like the Trade Desk, for example. So in pursuing the higher gross margin profile, I think we executed extraordinarily well. And just to frame that, currently we're nearly 30% gross margins. A year ago, we were at 13%. So we more than doubled them. And we've publicly stated that our targets are mid 30s to high 30s next year, the following year up into the 40s and maybe 50s. And we're certainly
unbelievable. Yeah. Unbelievable margin growth. That's that. And you're just getting started, right? Because the great thing about your market, e-commerce, is it is massive, but it's just going to grow and grow. I don't know, for the next two decades, it's going to keep growing. So, you know, how big is your addressable market? Because obviously you can't have every small, medium, and business, company in the world, but realistically, your addressable market, do you have any sense of how big that is?
It's there's tons of stats and all of them are in the hundreds of billions or even trillions. But I think that the best way to view it is not so much the e-commerce market itself and how that's growing. I mean, it's actually only 20% of total retail sales right now. And so there's a lot of growth opportunity between there and call it 90, 100%. But the thing that's the most important is not the overall market of e-commerce. It is the percentage of e-commerce that the top 5 have. Okay, when I say top 5, right, everyone knows. I mean, it's Amazon, it's Alibaba, Home Depot, Walmart. They actually control 53% of total e-commerce sales. Okay, so what does that mean? Well, there's around 600,000 other e-commerce stores outside of them that are responsible for the other 47%, right? So you've got 5 companies controlling over half the e-commerce sales right now. What does that tell the average investor? Okay, this other 600,000 e-commerce companies, they're having a really hard time competing. And what does that mean? Well, how do you sell products? You advertise them. So if you and I had our e-commerce shop, we know that whatever we sell, people are going to naturally go to one of those big competitors to check the price, to comparison shop. And so getting our name in front of the right demographic that wants to buy our products or has historically looked at and bought those types of products is a real challenge. It's a huge challenge. And that's what's led companies like the Trade Desk to huge success. They've got a $40 billion market cap. They were really nowhere to be found 5 years ago. So 0 to 40 billion in 5 years. But bear in mind, they're on track to only doing they're going to do $1 billion in revenues this year. So they're trading at 40 times revenues.
Right.
They're not profitable, but investors don't care. They've got big margins, and that's
Amazon, right? Amazon for years traded at a revenue multiple that was just flabbergasted, but it kept on growing because people saw that that's where e-commerce was going to go.
That's exactly right. And so my point to all of this is, what about the other 600,000 e-commerce companies? How do they compete? And so what we've built is we've actually, and I'll describe this in a moment when we drill down a little bit into our business segments, but on the Data Logiq business segment, one of our main platforms that we just launched a month ago is designed to level the playing field for those other 600,000 e-commerce stores. Now, obviously, we're not going to get all of them, but you don't have to get that many to create meaningful value, because they've got to compete against the giants. They have to compete against the companies that are of similar size. And the way that they do that more effectively is having advertising and marketing campaigns that have all of the things that they need, and then pricing that's transparent, because that's how they compete.
Let's talk about devil's advocate. There's 600,000 e-commerce businesses out there, which is great. But on the flip side, how do you guys get to them yourselves? Are you eating your own soup at the end of the day? Your own cooking, and you use the same tools to reach AGORACOM widgets and ABC pillows in order to how do you guys get to your market? How do you do your marketing?
It's a little different. I mean, there are components of it that incorporate direct sales. So we are building up a sales team, but that sales team is actually targeting mid-size ad agencies that have between 50 and call it 200 clients each, that may be spending between 10,000 a month to 100,000 a month, or even more in ad spend. Okay, and that's something that I would also point to. In order to be a client of the Trade Desk or Google's what's called DB360, you have to have a minimum monthly ad spend of $10 million per month. So who spends that, right? It's obvious. Those are the bigger guys. And actually, they spend 100 million to $1 billion a month on advertising. So you see what these small companies are up against. So, it's
what's the minimum for you guys, by the way, Brent? So if AGORACOM widgets wanted to work off Data Logiq or just become a client of Logiq, is there minimum spend?
The way we started is since again we just launched it that segment just last month, we're taking a $10,000 a month ad spend minimum, but that would be on a client that is onboarded by an ad agency. So it could be $10,000 across several clients, because what's important now is getting them to come onto the platform and seeing what they actually get compared to the way they've been doing it before. And it's fairly easy to do, because you do a side-by-side comparison. They're out buying ads, and the markup for the aggregators is 35 to 45%. But it's not transparent. It's actually a black box. So the client doesn't see that. But if they do a side-by-side simultaneously, and they're able to buy an ad with a 35 to 45% discount, and then we charge them, the way we make money is we charge 15%. So they're actually saving, they're saving more than half. And so, and the tools that they get, they can't currently get because they don't have the ad budget that Trade Desk has.
And can someone go direct to Logiq as well? So yeah, you've got this direct sales force where you go into advertising agencies, but again, if ABC Widgets said, well, okay, I like Logiq, can they go directly to logiq.com and become a customer and get all those advantages and savings?
They absolutely do. And that's actually the second part of the answer to your question about how do we aggregate these customers. There's a phrase in the industry, actually in all industries, it's called thought leadership. It's where executives or employees of a company are featured in the media. They're asked their opinion about trends within that industry. And, what are those publications? Well, there's certainly Adweek, and there's E-commerce Times and other industry specific media sites and publications, but there's also Business Week and Forbes and CNN and Wall Street Journal. And if you look at our management team, which I'm sure is probably another question forthcoming, the tenure they've had in the ad tech industry is something that you would find at companies like the Trade Desk or Google or Magnite, some of these big multi-billion-dollar market cap companies. And so, in other words, thought leadership is just now coming online too. A lot of people have reached out to us. We've been interviewed and talked about in trade publications, and that's absolutely stepping up.
And we talked about your 2020 revenues, 37.9 million, and you touched on the growth. I'm gonna timestamp this so we can put the image up for everyone to see. Your growth has been fantastic. You've been growing at 31% compounded annual growth rate. I think it's important to bring that up so people know it wasn't just a fluke year for 2020. 2016, 12.9, 2017, 15.6, 2018, 22.7, 2019, 34.6. Do you expect that kind of growth to continue?
Actually, if you look at last year and this year, and I certainly don't want to shoot myself in the foot, but if you look at it in terms of just revenue, this year over last year doesn't look too exciting, and that's on the revenue side. But if you look at the gross margins the previous year and in first half of last year, our gross margins were in the mid-teens. Now they're nearly 30%. We've talked about that continuing and the sequential growth continuing. But what I would also point to is that with the recent rollout of Logiq Digital Marketing, call it the Trade Desk lookalike, if you will, that type of revenue growth could really ramp and be classified as what's called exponential. And that's why companies in our space take on these big valuations.
So let's talk about a couple of your products. We don't want to go deep into the weeds, but we definitely want to understand. You've got some great new products like PayLogic. We'll talk about that. But your two main divisions are Data Logic. So that's end-to-end e-commerce marketing solutions that uses data and artificial intelligence for companies to get better marketing. And then there's App Logic, which I like. I like Data Logic too, but it's a mobile app. It's a mobile app development platform as a service, which means I don't have to have a technical expertise. It's kind of go onto this platform and I can build my mobile app. Let's talk a little bit about each of those and what investors should know. So let's start with Data Logic and what should everyone know.
Sure. Okay. Actually, if you don't mind, I need to do the reverse, because sure. App Logic and Data Logic, they're different yet similar. And the similarities are such that the entire business is aimed at small and medium-sized businesses. I would say, in the grand scheme of things, it's more like micro to small businesses on the App Logic side. And so, in very simple terms, what does App Logic do? For many years, we've said, "Oh, we're the Shopify of mobile," because most investors know Shopify. It's been a massive success story, but they know Shopify helps offline businesses get online, and that's what we do in simple terms. And then the question comes up, well, why would I use you guys and not Shopify? Because they're the biggest and the best. Okay, App Logic focuses on emerging markets, not developed ones. So you look at Shopify's main sources of revenue, it's North America.
Got it.
And so you look at AppLogic's, ours are in countries in Asia, like Indonesia, Malaysia, Thailand, Vietnam, Hong Kong, Taiwan. You know, your average investor here, they think, well, why does that matter? What's interesting there? Well, firstly, we don't see a lot of competition because the reason is that you look at North America and look at what we're doing. I'm on a desktop computer right now, and I'm guessing you're on a desktop or a laptop. And so with a Shopify product or BigCommerce or Wix, I mean, any of the online enablers that get you from an offline business to an online and offline business, you have to use a desktop or laptop to build your site.
Right, right.
And you can do that quickly, but if you live in an emerging market,
you don't have that luxury. You're not walking around laptops and desktops, but everyone's got a phone.
That's right, because they skipped the entire generation of desktop and laptops and went straight to the smartphone. In fact, I mean, the numbers tell the story too. It's about 80 to 90% smartphone use, and then 10 to 20% desktop laptop use.
Yeah.
So it's the opposite here and in Canada. So how do you navigate around that? Well, the AppLogix platform is all mobile. So when we've gone to customers, these micro and small businesses, and said, look, you guys are offline, you should be online, you know that. We can get you online, you can build it on the phone. You don't have to have technical expertise, and you can literally have your shop up and running in 2 hours or less with no technical expertise. And so that's how we grew for the first 5 years of business. We made some acquisitions over the past year, and that is what has built DataLogiq. So what does DataLogiq do? DataLogiq helps existing online businesses identify the right customers and sell to them. And that was the description I was using earlier in the whole trade desk scenario. So it's targeting the right customers, and that's extremely complex. But to simplify it, it is having profiles of consumers and enriching those profiles and being able to find salient points about those profiles to target on why they would be a good customer, and then providing those to our customers.
Do you intend, so is that going to be your wheelhouse, stay in the emerging markets? Because emerging markets are going to grow, I think, even faster than North American markets at the end of the day, because they're just getting up to speed on mobile. You still have Africa, you still have parts of Southeast Asia, you have so many parts of the world that aren't anywhere near where we're at. So it's safe to say that you guys will keep focusing there.
Yes, we are, and we will. However, and we have also described this on our conference call, so this is not non-public information. It is anticipated that we would spin off that business into either another public company or engineer a strategic sale or investment into that business. One thing that you touched on about emerging markets being in a higher growth phase, that's actually evident here in the US from the perspective of companies that are going public in the US that have a singular focus in emerging markets. And if you look at Southeast Asia, most investors say, well, what do I care about Indonesia or Thailand or Vietnam? Well, Indonesia is the fourth most populous country in the world. They've got 90% smartphone penetration, and their GDP is exploding. E-commerce sales are exploding. Okay, what does that mean to the average investor? Well, if you look at a company, SEA, their ticker symbol is SE. If you look at their stock price in the past 2 years, it's gone from $8 to $323. They've got a $200 billion market cap, 200 billion. It's an institutional favorite. It was the best performing global tech stock last year, according to Barron's. Okay, so why is that relevant? Well, if the average investor looked at it a year ago, 2 years ago, they would have made a tremendous amount of money. Well, how does that play into new investors that missed that? Well, over the past 2 months, there have been 3 announcements of Southeast Asia focused companies headquartered there, do not all of their business there. They're going public in the US into SPACs here. The lowest valuation is 2.5 billion. The biggest is 45 billion. So for the average investor, there's a huge opportunity in terms of getting in early, while at the same time being comfortable that these are institutional sponsored companies. And that trend is going to continue. I just saw something this morning. There are currently 40 companies that are focused in Southeast Asia where we operate that are in discussions with US listed SPACs. So you will absolutely see a mega trend of companies in that region coming public here. What does that do for us? Well, we have a specific focus there. We've been doing business there for 5 years. Our valuation compared to these other ones is a significant disparity. And so, coming in line offers a huge upside.
So there's, I guess the takeaway, the big takeaway from that is the market is starting to recognize value for companies that are succeeding in Southeast Asia, because it's just such a massive market that still has a lot of room to grow, and Logiq is right in the middle of that. And
yes, yeah. Please go ahead.
And you've got some key partners, right? So you've got DPX. DPEX in Singapore, PT in Indonesia, BGT Corp in Thailand, AGORACOM Telecom, that's in France. But you guys have already started teaming up with some key partners and major clients.
We have without being too complicated, the names you listed, those are the ones that we described in our IPO prospectus, which had to be greatly watered down. But I think if an investor were to go back and look at some of our announcements over the past 2 years, some of the partnerships that we've structured in emerging markets extend beyond the ones you just mentioned. One I would note that we announced last year is with the Social Security Administration in Indonesia, BPJS. They've got 52 million members and 600,000 small businesses that are part of their membership platform. The stock I mentioned earlier, SEA, their Shopee Pay division in Indonesia, which is actually the largest e-wallet in e-commerce platform in Indonesia. We've partnered with them last year as well. So we've got some big partnerships, and going forward, I think the impact from those will start to really ramp up.
So let's focus lastly. Look, one thing that's important in small cap is leadership. It's really critical. I mean, leadership is always important, but look, Steve Jobs passed away at Apple, but it was such a big behemoth of a company that Tim Cook was able to step in and continue it. So that's the advantage of mega companies. Companies like Logiq, small cap companies, management I think is even more critical until you grow into hopefully this behemoth you want to become. And man, I took a look at some of those profiles of the management team, the directors, the who's who of companies are in their bios. How important is that to investors, right? And what kind of ownership does management currently have in Logiq?
Sure. I would say it's paramount to investors, especially in the micro and small cap world, because to a viewer, so on this format, a viewer watching this, his or her entire perception of the company is based around what I say. And I'm one person, right? But if you look in the micro cap world, there's actually hundreds, if not thousands, of companies where literally that's all you get. It's one person. And unfortunately, many times it's one person working out of the garage. Not to say that garage companies cannot become successful like Hewlett Packard.
Google did it, and so did Hewlett Packard. So did Hewlett Packard.
Absolutely. But I think in terms of credibility, both on the individual investor side and on the institutional side, if you know that the management team has tenure at some of the world's best companies, that's important to you, because they would not join, they would not put their name on it, they would not leave a high-paying job to go to something that doesn't have promise. And then also, You look at it from the customer perspective, same thing. You know, they obviously will look at pedigree and say, all right, well, you're telling me all of these great things about what your platform does, but what you tell me, why are they relevant and what leads you to that conclusion? Well, our chief executive officer, Tom Furukawa, Tom built the ad tech business at Yahoo. He built that in emerging markets, actually, 20 years ago, IBM Tivoli in Asia, 17 years ago, Yahoo in Japan and in North Asia. He's worked at Magnite, which multi-billion-dollar market cap company on the NASDAQ. Steve Hartman, he was at both of those companies, I'm sorry, all three, plus LiveRamp. My colleague, Matt Brent, was at Ubisoft and Upper Deck. Two of the world's biggest consumer software and gaming companies.
Unbelievable.
Yeah, and you know, and it goes on. I mean, if you drill down and you look at history of our board, we were very fortunate to get Josh Jacobs, who was the former president of Omnicom, the third largest ad agency in the world, and then Leah Hickman. I'm sure all of our viewers know Adobe software, but what they probably don't know is that Adobe is almost 100% cloud-based now. Not to get complicated, but you buy your software online from them.
Sure.
And all the updates have come to you online. But prior to becoming a cloud-based product offering, it was packaged software. So you go to Best Buy or
I remember those days. Yeah.
Yeah. Well, Leah Hickman, who used to be an executive at Adobe, she was responsible for convincing their board and senior management to migrate the business to all cloud. And Leah just joined our board late last fall. So if you look at the tenure and the history of our team and of our board directors, you'll see some really impressive things. And what does that mean? Well, in terms of reputation, a lot. In terms of know-how, even more. In terms of strategic planning and roadmap, a tremendous amount. And so for an investor, yeah, it absolutely matters.
And by the way, are you able to give us a sense of management ownership?
Yes. As of right now, on a fully diluted basis, I think it's about 16%. So we've got a stake. And also, I think it's easy for investors to look at insider purchases. There's never any insider sales because we have a 2-year rolling lockup as well, in addition to our affiliate lockups. But I regularly buy shares in the market, and so I would pay attention to that. Yeah.
Hey, if you're putting your money, I call that putting your money where your mouth is. If you put, there's no greater indicator at the end of the day. So last question, Brent. Here's how I want to sum it up. Between your performance on revenue, add on to that your performance now on gross margin and how that's improving, your growth going forward, the team you've got there. How confident are you in the next 2-3 years of Logiq's growth? I mean, how is it safe to say you're in the strongest position you've ever been? I mean, the smile on your face probably says it all right there.
Yes, yeah, absolutely. And what I would also point to is that we've made 3 acquisitions in the past year, and those are predominantly technology and IP driven. Along the way, we have absolutely seen some very attractive candidates from an accretive revenue and even earnings side. Some privately held companies that could very well ramp up our growth on the revenue side significantly, and then taking their customers and rolling our platform in would improve those margins significantly. So yeah, I'm more excited today than I have been since I started the company 6 years ago.
And that's saying something, because you've been there every step of the way through some pretty great growth cycles. And yeah, it looks to me like it's up to everyone to do the due diligence. I'm going to tell people that, but look, I've been doing this for almost 25 years now, and 24 3/4 years. So it's clear to me that you guys have unbelievable ingredients and all the elements needed to create an even greater company you already have. I mean, essentially $38 million in revenue is, for the small cap world. The great thing I love about that is it's not a concept, it's not an idea. You're not just working hard, you're executing. So now it's just a case of when a company can get up to, that number, then it just becomes a case of, hey, can they hit 100, 200, 300, $400 million? It's only a question of degree of success now, and we can't wait to be along this ride with you for the next 12 months and long after, Brent.
Thank you.
Thanks for joining us, Brent. Can't wait to have you back. For everybody at home, you've been watching or you've been listening by podcast on Spotify, Google, Apple, your favorite podcast platform. To Brent Suen, he's president, executive chairman at Logiq, trades on the NEO under LGIQ, and the same symbol LGIQ for our US friends on the OTCQX. This is the part where you guys got to do your due diligence. The company just listed on the NEO on June 21st, so it's a brand new listing in Canada. Gives you ample opportunity to get in early, but to do that, you've got to do your due diligence. Get to AGORACOM, look at the company's profile page, because we know it's technology, so you need that 10,000-foot view of the company first to kind of understand. But then either from AGORACOM, or you can see it right over Brent's head there, Logiq, LOGIQ.com. Get there, do your deep dive due diligence. If you believe in the future of e-commerce, if you believe in the future of small and medium businesses and how they're going to grow and take over market share and grow within the e-commerce space, then you've got to take a close look at Logiq. Just don't tell us 12 months from now that we didn't tell you so. Thanks for joining us. Have a great day. See you next time.
Thanks.
Hey guys, this video is over, but don't forget to help your company by liking it and then leaving a comment below. And then don't forget to help yourself by subscribing to our channel so you don't ever miss another great AGORACOM small cap video.